What's up, everybody? It's Omar. It is Saturday, May 19th, 5:31 p.m. and I'm giving this one last try today. And this is a video about how to build support and resistance, guys. And like all of you, I started my trading journey watching guys like Tim Sykes, Warrior Trading, and several other people. And through my journey, I've been dibbled in this and dabbled in that. I dabbled with a lot of indicators. Let me show you real quick. I have a YouTube channel for those of you that are watching this for the first time. If you just type my name, watchotrade, I have like about 140 videos now. It's crazy. You just go to playlists and I have a whole bunch of videos. This is the catalog that I started with 14 videos here. So if you know nothing about trading, you should watch these videos. But you're gonna notice in those videos, I used to use a lot of this. Like if you can see, like I used to use one. This is Fibonacci, and this is the MACD and the RSI. I used to use all that shit, all these things. I got rid of all of it, honestly, because around this time last year I went on a big slump. I lost a lot of money, and a lot of it I felt was because of using all these indicators and not really focusing on the chart. So I took a lot of time off, and I really had to evaluate my trading strategy. And what I've learned, one of the things that I saw in common with the traders who I follow, that I respect, none of them use indicators. Most of them just use VWAP. Some of them may use some simple moving averages, but the majority don't. And trading, guys, in a nutshell, is based off support and resistance. All right. So I'm gonna introduce it with a high price stock and then a low price stock. I'm gonna show you. So here's Apple. Okay, to show you that it's the same, whether it's Apple or some shitty dog shit company like POTN or Acre or any of these crappy sub-dollar stocks, or stocks all move off support and resistance, right? So here's an example, right, of a stock that, let's look at the yearly. All right, this was on May 14th. May 14th, this stock, or May 10th actually. This was what day was this? Oh yeah, May 10th. This stock had reached the height of 190.37, right? So we're gonna put up the 5-day 5-minute chart. So a stock like that would absolutely fall into my watch list, right? So if we look here, right, so let's say I'm mapping my support and resistance lines, right? Because the day after that, if you notice, yeah, now I'll do 10 days. Let's do 10 days 5 minutes. This is where it peaked, right? 190.37, right? So if I caught this on my watch list, and what I do is, this is how I do it. I go to finviz.com, and when I go to finviz, I go to screener, I go to all, I set my price. So sometimes, a lot of times I'll look for stocks under $50, then stocks over 50, over 100. Just really depends on what's moving, what's not moving. All right, oops. And then I'll look for stocks that are either down or up 5%, right? So, you pick up 5% or down 5%, and then the volume over 1 million shares traded, because you want stuff that's somewhat liquid. All right. Oh, that's gap. I'm sorry. I meant to say change from open. Sorry about that. So change from open, not gap, change from open, right? That's what I look for. These three things. I get 34 tickers. Then I go to charts, and then I go to candle. And then it gives me a view of a chart, right? So a stock that's holding its highs, right? So this EGY, this is what Apple would have looked like on that day, right? It would have on that day, right? It hit a high, ripped all day, right? So from here, this is what I would have done. For a stock holding its highs, I would have mapped it at, the higher day. Now, how do I get this to look like this? Guys, all due respect, a lot of you guys are real lazy. You guys do not even take the time to try to figure anything out. So, there's this thing called drawings in Thinkorswim, and this is called a price level. That's why I currently have it set to. This is not going to default like this, but when you just literally put a price level on the chart, you right click, go to edit properties, and then what you can do is you can turn on the extension. It's going to be off by default. You just say on, and then you say on for both left and right, and then you should put the price wherever you want it to show. I say show on left. You can make it whatever color you want, you can make it whatever style you want, whatever width you want, then save as default. When you save it as the default, that means every time you use this, it'll automatically appear this way. So this was the height this day, right? And if you notice, when you map your support and resistance, you want to like map it based off pivot points. All right. So if I'm looking at this, I'm zooming in more. Right now, what I do a lot of times is I'll start like with a 15-minute time frame. Let me do, watch, I'll show you what I mean. So sometimes I'll do this. I'll show you like the full scope of what I do sometimes. So sometimes I'll start with a 15-minute time frame because 15 minutes gives you a real sense of where the direction is taking place, right? So I can see here, and I can see there was a bounce here. Let me just zoom in here more, right? And I can see there was a breakout level here and some consolidation here. So that's really important. And there was some consolidation down here. This is kind of where the low was, right? And here is the pre-market high. Well, it actually was, but there was some consolidation here, right? So these key levels, and then you can kind of map this as well, because it's sort of right there, right? And then what I do is I'll also start from the 15 so that you can get, let me cancel, let me zoom out so you guys can see. So those are my levels, right, that I started with, right? And then what I'll do is then I'll also go from there I'll go to the 5 minute, and I'll look to see. So here on the 5 minute, you can see how it's you see how the 15 minute captures it pretty well. And then, but there's a consolidation level here on the 5 minute time frame that you wouldn't have seen on the 15 minute. That's why it's important to map. And I'm mapping this high right here because there's a lot of consolidation here. And if you notice right here, there's a lot of consolidation as well. So this level here. So, you could map it, or you can just base it off this because it's sort of in that range. All right. It just really depends up to you. And then this was the high at this point. So maybe you want to map this as well, because maybe that'd be a key level as well. Okay. So now, right. So that's that day, right? So what am I looking for? So obviously this hasn't happened yet. I'm either looking for the stock to break past 190, pull back, hold where resistance becomes support to go long to risk off of, or I'm going to take it short if it can't hold that, right? So now let's look at what happened the following day. The following day, this stock started to pull back, right? Pre-market. So you see this is a consolidation level right here. This was the high, right? And you see it's kind of pulling back, right? Well, the market opens and look what happens, guys. And I'm going to use a smaller time frame. I'm going to use a 5 minute, let's use like a 3 minute or 3 minute time frame. Now, usually I always have a 1 minute time frame, 5 and 15 to get 3 different views. If I have Thinkorswim available, a lot of times I don't because I can't access it at work. Sometimes I can, sometimes I can't. But look what happens, guys. Just so you can see. The next day, look what happened. Can't hold 189.46. So what does that tell me? Look at the body of the candle. Even though this one ripped up, the next one ripped down. And then it gapped up. And then look where it bounced off of, guys. Look where the stock is literally bouncing off of. All right? So right here, this is where I would have bought the dip. Thinking, not knowing that, hindsight 2020, it pulled back. But when I talk about looking for stocks holding their highs to potentially buy a break above or buy a dip, let me pull that back again. Oops, 10 days. So you can see it didn't break out, right? It started pulling back post-market and then pre-market the next day. You got this. And then what happened? It pulled back, right, to a previous level, and it ripped. So now in theory, you could have, in theory, the next day, you could have took it short, risking off the look. It couldn't break this level here, okay? Couldn't break this level, all right? Now, you're watching like, well, Omar, how do I know to get in or out, The problem is this is a 5 minute time frame, so it's harder to tell sometimes on here. But it just really depends. Let me do, because normally I'm doing like 2 minute, 1 minute, or 3 minute. All right, so the next day, right? So here we go. Look what happens. The stock pulls back, bounces, pulls back. This is a key level, right? And it kind of holds. Now, this is how I would have known to at least dip by this. I see that it double bottoms here, right? I see that it double bottoms here. I see that it gaps up, it pulls back, it tests this level. Now this body, as you can see, the bulls and bears are fighting and the body's in the middle, which is telling me that it's kind of deciding which direction to go. Based on this big pullback, I know that I'm going to get some sort of bounce. And right in here, when I saw that the candle sort of like is sort of above it and the next candle's ripping above it and pushing that volume, I can go long, risking right off here. So I can get in here, right? Because I see the volume coming in, risking this. And what I need to see on the level 2, I need to see the bid and the ask above this support line. That's all I need to see, and then I can take it long, risking that. And you ride that for a quick spike. That's what day trading is, guys. You know, like, because in theory this could have been, you know, people taking profits, short sellers driving this down, and then it just continues on up. You don't know if it's gonna go up or down, right? But let me pull back the 10-day chart. Sucks that I can't do 6 days. I'll do 10 days. I'll just have to zoom out, or just pull this over. So what, right? The reason why I couldn't pull up is, let's zoom in here. Look what happens. There's a lot of consolidation here. So it needs the volume. It can't really break it. It got above it for a second, but that is telling you, look at the consolidation here. It's telling you that it's potentially on a bearish trend. Now, it could have got down here, ripped, and just continued, but it formed a lower high, and that is telling you that it's potentially on a downward trend. So when you see it gap up, and look at this now, this level, look at this, it's sort of acting as resistance now. Can't break it. This is telling you, when you see that it's starting to gap up, it's telling you that this is showing some weakness. And this is where you could potentially short, risking this. So you see how it's acting as resistance, and you go short. You could short it here and cover here if you're freaked out, but potentially you gotta ask yourself, hey, you're looking at the daily, right? And you're saying, wait a minute, maybe this is the beginning of a reversal, because this has had such a big move up. People are ready to take profit, and I'm in potentially on a downward trend. Okay, and you capitalize on that, and look what happened, guys. The stock couldn't break above that level. Okay, as you can see, right, got above here, pulled back. You could have dip bought it here, ripped, you know, sold into this, you know, knowing that it's, you know, this is a potential area if you can't hold it. And look, gaps up, double tops, can't break it now. It's acting as resistance, and look at forming lower highs, and there it goes. It keeps breaking down. All right, and look what's happened. It gaps up, can't break this now. This previous support is now acting as resistance, guys. That's all stock trading is, all right? And that's how you make trades. I prefer short selling, especially if I see a stock up this high, all right? I'm thinking, all right, this is probably the potential of a downward trend. Plus, it has all these gaps to fill below, which is telling you, like, this is a gap to fill. More than likely, Facebook is going to find its way back here, all right? Now, it doesn't guarantee that just because there's a gap to fill below, it's going to get there, but the potential is there. Now let's look what happened the next day. Okay, so the day after that, pre-market, all right, you know, it's finding its range, right? This was at this point, all right, this is that 187. If you notice, let's go back to the 10-day. If we look what it's doing. It's acting, all right, as resistance based off this level, okay, that we mapped. All right, so all right, with that, let me zoom out. Okay, so with that, look what happens here, guys. This is a support level, right? It's holding it, and this is resistance holding that. It's not sure which way it wants to go, but it can't break it. And look below, it gets below it before the market opens it. This time, this is 855, and you can see, like, oh, wait a minute, it's forming lower highs now. So I don't, you know, look at this. It gapped here, it couldn't hold it, right? So look what happens. The market opens, stock tanks some more, finds some support here, gaps up. Look what happens. Can't break this. So when you can't break this, you can go short risking this. And look, it tanked some more, got down, or broke down even further, found its support, and now it's on backward on an upward trend. Even though the overall trend is still downwards, you know, it may still, you know, sometimes it'll still have a green day. Doesn't mean, because look what happens the next day. right? Just to show you how support and resistance works. All right, here's some resistance here that I didn't map, but look what happens the very next day. Stock tanks, stock gaps up, can't hold that, and it's back down on this downward trend. The next day, because shorts were in this for so long, it ripped because they were covering. People were holding from this area, and they see this consolidation level here, right? So they see over underhead support, overhead resistance here, right? And so there's a big consolidation area. So short sellers see this and like, you know what? I'm just gonna take my profit here because this may, nobody knows what a stock's gonna do. So they think, hey, maybe this is another trend. But look what happens. The stock rips and gets what? Gets rejected. Look where it gets rejected, guys. At a key consolidation level, right in here. See, there's all this consolidation. This is not an accident. It's not an accident that it's getting rejected there. It's getting rejected there because this is a consolidation level. And then you can go short risking that. And look where it bounced off, previous support. That's all stock trading is. So you're saying, hey, Omar, what would I do if I saw it like getting some volume and going, how do I know to go long? Risking off these. Me personally, like if I'm going long, what I like to see is the stock, generally, the body of the candle close above whatever resistance line I am, or that I'm looking to potentially go long on. And if I see the volume coming in, you can see there was a lot of volume, and you see the bids stacking up on the buyer stacking up on the bid and thin sellers, then you can go long. And then what I like to do personally is I use what's called a trend line. So what I do is I click the trend and I just see where it first pulls back, and that's how I draw my trend line. Now this won't be this way by default, but wherever you put a trend line, all you gotta do is put extension on for both sides, and then pick a color, style, width, and then save as default, and then it will be there every time you do a trend line. And I just ride the trend. So me personally, I would have rolled this up, and once I saw it break the trend, and especially, you see, look at this. Look where it got rejected. It got rejected right here. Why? Let's zoom out. This was a consolidation level, 188.35. Look. That's why it got rejected there. You understand? That's why it's important to map your support and resistance, even though, it didn't completely tank, but look where it bounced off a previous support level. Look where it can't hold above a previous resistance level. That's all stock trading is. That's all it is. And the next day, we see what happened. Look, it got back up all the way to 188.72. Couldn't hold above it. Now, in theory, you could have saw this and said, hey, you know what? I am going to go long. I see the volume coming in. And, you want to always look at a bigger time frame to see where the stock is at. Because if you're going to potentially go long, you got to see. Now, if you were paying attention, like I didn't map it here, but look at the consolidation here. I just didn't map it. That's why that's why it's important to map your support and resistance carefully. So if you didn't map this and somebody's just buying a stock and they're not looking at the bigger time frame, they can look to see, oh, wait a minute, there's a lot of consolidation in this level here. And look what happens. Stock gaps up, gets rejected right into that consolidation level and fucking tanks. And look at this, gaps up here, lower high. You could short here, risking this or risking this. And look at this, bounces literally off each of those levels. Once it gets below VWAP, that's bearish. Once it's above VWAP, that's bullish. That's another thing. I'm sorry I didn't really mention that. All right, and look where it bounces. Look where the stock is bouncing. It's bouncing, literally bouncing off support levels. That's what stock trading is. All right, and look what happened the next day. So that was Thursday, right? Stock closed weak. Friday, market opens, the stock spikes, gets rejected where? Right into this consolidation level. Can't hold it. Gaps up, double tops, and then continues to fade. That's what stock trading is, guys. That's what stock trading is. Now what you got to do is you got to map your below support. So there's a lot of support here, this level. So this could potentially like fade and then bounce and then continue on upward, But maybe this is the beginning of a downward trend for Facebook. All right. Facebook ripped, but it might continue to go back. And that in a nutshell is support and resistance. So when you look for stocks, guys, all right, that's how you do. You look for stocks for two ways. You look for stocks that are either holding their highs, okay, that are holding their highs like this, all right, to either to buy the stock if it's going to continue on up, or to potentially buy a dip if it sells off at the market open. Okay, if you're a buyer, like if you're not into shorting. All right. And so I'll pick a stock, any one of these stocks. So let's say TCS. Look, this is went from 4 to 8. All right. I don't know nothing about the company, so let's put TCS. Ah, shit. All right, so this stock, let me clear this. This stock has been, the last 3 days, it's had a lot of volume. 1.35 million shares traded yesterday. But this is a stock that barely ever trades with any volume. But I just want to show you just to prove a point. So here's the 5-day. Matter of fact, I put the 5-day 15-minute just to show you how I do this, right? So right now, this was the high, right? Closed sort of like sideways. So that was the high. If I'm mapping back, this is an area. This is an area of consolidation, as you can see. This is another area here. This was the high of day. So this is at this point, that's important to always map. And then here we got something that hit support. And this is the 15-minute time frame. Now, this is a stock that less volume. You definitely want to look at the 5-minute and even the 1-minute to potentially map support and resistance. But these are the key pivot points, right? Okay, so now I look at the 5-day, 5-minute, 5-minute time frame, and you can see, all right, this is clearly breaking, and it's pretty consistent with the 15-minute time frame. And the 5-minute, you can see that there is some consolidation here as well, so that may be important. All right, so a stock like this, which is not very liquid, but it could be it's been on an uptrend, maybe continue higher. So what I would want to see is, and this is important too, right here, this high here. So I would want to see, all right, is it gonna break above 833? And if it breaks above 833, pull back and hold, I'm gonna take it long, risking 833. Now, if it pulls back and if it like holds support in one of these levels, either here where there's a lot of consolidation, or this level here, all right, right around here, or even here, right, and you get the momentum, I buy a dip risking off that, because maybe long term it's continuing to go up. Now if I'm a short seller, if I like to do both, if the stock gaps up and gets rejected here, then I'm going to short it, risking off this level. That's it. That's all trading is. All right, that's it. Now if it breaks above this and holds, I can go long, risking this level, looking for this the potential target. Now it's not a ton of range, but I'm just trying to prove a point. That's what stock trading is. All right, now let's look at stock on my watch list. HUA. Let's use that. HUYA. Now, why was this on my watch list? This was on my watch list because and I didn't. Let me just remove clear all this. So this was on my watch list because it hit a high of 24.35 and had a crazy sell-off. So what I'm expecting is, all right, this is a stock. If you look at the yearly, right, it's a new company. It's hit a high of 24.35. Right, so it's probably, and it's low, daily lows here, right, which is right, 1926, right. So I'm thinking, oh, maybe it's the beginning of a pullback. All right, and so let's look at it both ways. This is the start of the run, right? So here's where it initially took off. This was the high. This is where it pulled back. And then this was the high here, and then it pulled back. I'm just gonna leave that there though. And then this is kind of where it hit a high here, and it pulled back to this, and then it hit a high here, it pulled back to this. So now let's see what happens. The next day, look what happens. It consolidates right in this level, which was the previous day's breakout level high. And look what happens. Stock literally holds that, takes off. Okay, takes off. Day 2. That's when buyers got in. They saw that. It didn't even give you a chance to buy. I mean, this thing just ripped, right? So let's see. This at this point, this is the high day, right? Then it hit this, which was the high day. Pulls back, consolidated here. It pulls back, consolidated here. This was a high at this point. So we want to look at this. So what happens, right? And then pulls back here. Well, day 3, look what happens. Stop market opens, gets rejected into this level, pulls back, And here, it doesn't seem like it. You could have got 50 cents here, 1,000 shares, 500 bucks. But then, right, pulls back, but it's still on an upward trend. So the dip buyers saw that, and they said, hey, wait a minute, it's forming a higher low, right? Because it's still on this upward trend. It's not getting back down here. It's holding here. So I'm going to take it long. And they got in, and look what happens. It briefly breaks this, pulls back, all right, and breaks out, but can't hold it. This is why I always tell you be careful about buying breakouts. But this is the high at this point. Pulls back, and look where it bounces. Bounces. Where is it bouncing off of? The previous day. This was the high of the previous day when it initially spiked. That's where it's bouncing off of for the most part. That's why you got to map your support and resistance. That's why you got to create the alert, so that when you have the alert, the stock will alert you when it touches a key level. And look, it just continued up. It formed these flags. These are flag patterns. If you notice here, these are flags. And, you know, it just literally continued to run, right? So I'm just mapping these to show you, right? And then, you know, then it went after hours. It just continued to run, consolidated here, right? And let's see. So the next day, you know, and it actually has some consolidation here, believe it or not. And then what happens? Next day, briefly breaks above it pre-market. Market opens, spikes, you know, and then, you know, gets to its high, and then it just completely fucking tanks, right? So, you know, and it just literally, like, couldn't hold any of these resistance levels. Just completely, with this point, it just touched this and it bounced off this, which was a previous support level, right? Literally bounced off that, right here, okay, which is a previous support level. So the reason why this was on my watch list, my expectation was, okay, maybe it's the beginning of a downward trend. And this is what I talk about when I say short a spike into resistance rejection. Look what happens. The stock market opens, it gaps up, and this, in theory, I didn't map it, but this level here is important because this is a resistance level. And look what happens. Spikes, can't hold this level, and continues to fade. Look, bounces off this, gaps up, but let me zoom in here. But look what happens. Can't break it, can't hold it. This is the previous day's close price. Look what happens. Tests it again, can't break it, which happened to also coincide with the previous resistance level of consolidation. All right, and look, this is that level. It's a lot of consolidation. You couldn't get above it, and look at this, faded. Now you could have, so you had 3 top opportunities to short this. All right, and you could say, hey Omar, what if I saw this double bottom, and could I go long? Yeah, a lot of people did when they saw 1950 hold. And look at that, you could have got to 20, but you just gotta be careful. Now, obviously, I'm looking at a 5-minute time frame here. If I'm doing this, I'm really looking at a 1-minute time frame and a 5-minute and a 15-minute. But if I do the 1 minute, okay, this will give me a bit of volume. There wasn't a lot of volume, but here, this is showing me on the 1 minute. Look at this. This can't hold. Look at how weak the body of the candle is closing below the price. So I know that I'm not going to go long here. I need to see that close above and see some volume before I get in. And look, each time just couldn't do it. You know, this is not a lot of volume, but I'm just trying to prove a point that support and resistance matches out. Look, now it finds a bottom here, okay, and it gaps up, and look, the previous serious support level is now acting as resistance, and you could have went short. Look at that, right into this from 1970 to 1896, 1998. Right, that's like almost 80 points, 80 cents. I'm sorry, 1,000 shares. That's $800. Okay, you know, so that is in a nutshell how you map your support and resistance lines to trade off of. All right, like AMD's been on this crazy upward trend over the last few weeks. All right, so if I do the 5-day, 5-15 minute, right, this is a stock that's just been ripping and running. So if you look at it, sorry, my thing, right? So this is 5 days ago. This was the high, and I'm using a 15-minute time frame right here just to be somewhat quick. This is the low, and then, you know, kind of formed the high here, and then it pulled back, and then consolidated here, and you have some consolidation a little below here, right? But then the next day, look, it breaks up, breaks above it, pulls back, kind of consolidates right into this level, which in theory is right here, 1230 level, which is an area consolidation. See, 1230. Look where it bounced off of, 1230. Now, a stock like this that doesn't move with a ton of range, little by little, 15-minute time frame is good to trade off of. Because it's not super volatile. It's not something that just moves real. It kind of slowly moves up and slowly moves down. And if you notice here, like after hours, it's up again. Right? So here, it gaps up again. This is the high right around here. A lot of consolidation. Pulls back, finds some support here. And some support here. And then look, it rips right above it. And obviously, once it breaks above 1250.67, now let me do the 5-day 5-minute just so you can see. On that day 3, you know, you're not even getting, like, it just spiked. So if you buy this, just know that this is your risk. And because there's so much volume, you can take a shot at it. Me personally, I like to see a test, and maybe on the 1 minute it did. I don't know. Let's see. Because I'm using a 5-minute. 5-minute time frame, you don't even get a pullback. Let's see what happened here. All right, so here it is. So yeah, if you look, yeah, so this is on the 1 minute time frame. You see, I see this gap up, right? This is the high, pulls back, and it slowly closes. 1267 is the low, close at 1274. So on this candle here, where I see it close at 1274. I'm sorry, here it closed at 1274. Yeah, I'm sorry, it closed above the price. So, but there's still the body. This, you know, I just would be concerned because this is not above this. But right in here, I'm pretty comfortable at this point. I see it closes here, and it's, even though it's bullish because the bull's looking like they're winning, and you just literally ride the trend. So when I see something like this on a 1 minute time frame, and if I'm going long, all right, again, me personally, I'm using that trend line, and I'm saying, okay, this is where it is, and I'm just riding this trend right up. And as long as it's on this trend, I'm good. And you can see once it broke the trend, it pulled back. All right, you know, that's kind of how I buy breakouts. All right, me personally. All right, now let me get back to this. Now look what happened though, guys. When it, now remove this. When it double topped here and it pulled back. Oh, I gotta change this to price level. So when it double topped here and pulled back, look where it bounced off of a previous resistance level, which you can't support. Bounces up here, holds this, and when it pulled back, you know, kind of pulled back near that previous support, gaps up, look, can't hold, now can't break this. So a lot of people went short, but look where it bounced off a previous support level. That's why it ripped, because buyers, let me zoom out here now, let me, oops, I'm sorry, I don't need to zoom out. Look at this, this was the previous breakout price. This is where it consolidated and held. So buyers, smart buyers see that and they buy based off that. They're not using, a smart buyer doesn't give a shit about MACD and RSI. They're just basing it off support and resistance. And look, and then that's where you got the next leg up. All right, this is where, this is on Thursday. It's pre-market, I'm sorry, for yesterday. It got here after hours, pulled back, kind of consolidated. You had this crazy up and down action. Here's where there was some consolidation right here, right in this level. And look what happens. Rips, pre-market, gets to a half 1326, can't break it. And now if we're looking at it on a 5-minute time frame, this is a 15-minute time frame, but if we look at it the 5-minute, there we go. Now what happened? The stock all day slowly faded, but it's bouncing off that 1298 level. So what we want to see come Monday is it going to spike and get rejected at this 1309 level where there's a lot of consolidation and fade, and maybe it'll fade down to, like, let's say this 1275 and then continue on up, because maybe it's still in an upward trend. I mean, we don't know, so we'll see what happens. But if it breaks above, the only way, me personally, I'm buying this is if it, like, let's say held 1309 and continued on upward. But you gotta remember that it did double top at 1326. There is some overhead resistance in this level right here, so it could get rejected and continue down. But you gotta think, me personally, one of my good buddies asked me what I think about the stock, and I'll just clear this just so you can look at this. I'm thinking, hey, this stock's had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 green days in a row, right? It's had 11. It's starting to show a little weakness. Okay, that's telling me maybe people are going to take some profit. And it does, in theory. It has two gaps to fill. It has a gap to fill above here. Well, it actually filled the gap here. So it has a gap to fill below. Sorry. This is the gap to fill. 1036. So I'm not saying it's going to get back to 1036. A lot of people are bullish on it. But in theory, it does have a gap to fill below. It could potentially get back. But I'm thinking, hey, you know what? People are saying, hey, AMD always has these crazy runs when then it always sort of gives it back. You know, has a big run, then it gives it back, has a big run. They're like, hey, you know what? I think I'm going to take some profit. You know, I got in. So a lot of buyers have probably got in at 9, and they're like, they're starting to see a red day. And they had a couple others, you see, and it didn't really do much. Consolidated. And maybe it's going to consolidate before it moves up. But I think and it has a gap to fill here, 1247. So I think potentially come Monday, it starts to fill the gap below before it continues up higher. All right, so that's the gap to fill right in this level here. So we got to see what's going to happen. Is it gonna hold this level here, this 1309 level, where there's a lot of consolidation here? So, or is it gonna just potentially touch it and give it back? So that's how you trade, guys. And at some point, this is gonna, you know, it's gonna find a level below where it'll fill the gap. I'm sorry, where it will bounce off, and maybe it'll continue higher, and you can buy the dip. But all you're doing is basing it off support and resistance. That's all, guys. All right. So again, so just to be clear, you go to FinViz, and you can look for stocks whatever range. Like I put on the 50, but you can also do between 50 and 100 too. Same thing. 1 million shares. Look at TTD. I've been trading this forever. This shit is on a fucking tear. Definitely put this on your watch list for Monday. Right? And I start with 5. But let's say, all right, let's say the market's dead, then you lower it. Then you say, okay, I want to see if there's more stocks in this range. So I'm going to lower it. Let's say up 3%. When I go up 3%, look, I get a couple of more tickers. Okay? So, you know, that's how you just change your range. All right? And the same thing, I look for stocks that are down 5%. Okay? And there's no stocks that are down 5% in that range. All right? So, you know, but if you look at stocks under 50, oops, I put under 40, whatever. All right? And then I'm looking for stocks with big candles, like CARV would be a good example. A stock that's crazy overextended, and I may be looking a short into a spike because it's starting to show weakness. All right, so here, let me eliminate all this. Okay, so this stock has been on a run. All right, piece of shit stock that should not be up. I think even the CEO acknowledged that. Right, so last time I had this run, it gave it all back. So you know it's going to give it all back, right? So also you got to find shares to short. So what I would do is, you know, map my support and resistance, right? So just doing this quickly. Okay, so here it goes up, and this was a trend right here where it moved up. All right, and this was the high here, and 1339 was the high. Now look what happens, guys. So the market opened Friday. Let's do I do it Friday 5 minutes, and sure enough, you know, the stock tanked from 13 to 8, and it was on my watch list too, right? It just literally couldn't hold any of these lines. Look at this. Market opened, you know, spiked up, couldn't hold this level of resistance. Came down, you know, got close to the support level, bounced up, couldn't hold this, and just tanked all day. Couldn't hold any levels. So maybe Monday, right? And you got to map this below here because this is important. There's a gap to fill here too. Believe it or not, these things are pretty powerful. So you gotta pay attention to a gap to fill here too. So it's probably gonna fill these gaps. You gotta look at one at a time, see how it happens. If it's gonna fill this gap right here at 643. But let's see what happens Monday. Maybe the stock spikes and gets into this consolidation area of like $9 and can't hold it, and you go short. And that's what these big traders on Twitter do. They find these stocks with a lot of volume and they short into these, and that's why they make $10,000, $15,000, $20,000, because they're taking a lot of volume. They take it, you know, they're buying a lot of shares because the stock has volume, it's liquid, and they're using support and resistance to risk off of. And that's it, guys. So again, you're looking for stocks that are holding their highs, stocks that are getting beaten down. to short into, or you could potentially buy if it holds. You know, if like let's say tomorrow, let's say hypothetically it gets above 912 and it can hold 912, then you can go short risking 912 because you think, hey, you know, it may go up to this next consolidation level, $10, because it's a low float stock and it's a low market cap. So if you look at, I think it is, let's see, CARV, let me put it here, I don't think, oh, CARV is yeah, look at this, 3 million. So anything under 20 million is considered low float to me, and anything under 100 million market cap is considered small. So that means that if the stock trades more than the volume, like let's say Monday, if it gets more volume, more than 1.4, if it like gets to the full float, all the shares rotate, that means they can go higher. And we seen these stocks squeeze. I mean, we seen it on here. Let's do here, and that'll be the last one, and then I'll end this. Like here was a stock that we thought was gonna die a lot sooner than it did. Let me clear this. All right, so we'll look at here, and then I'll end the video. Here is a stock that, just like CRV, we thought, you know, it's not gonna run crazy. And look at this thing, got all the way up to 20 bucks. All right, you know, it's been on this crazy tear. All right, so if we look at the last 5 days, all right, it's been on an upward trend, right? So here's support, resistance, support, resistance right here. There's a low, this is the high, and you see I'm just mapping the trend, the pivot points, right? Where it gapped up, where it pulled back, where it gaps up, where it pulls back, you know, here where it gapped up here and then it pulled back some more. Okay, now here's in some more. All right, now in theory, on this day where it started to run, it gave it all back, right? But then it squeezed short to death. Oops, let's see what happened here. Let me close that. That's that damn FinViz. So look what happened here. It just squeezed shorts to death. But look what happens, guys. It attempts to break 1650, can't hold it, pulls back, forms a flag. That's a clear flag pattern. Holds that previous support level and then runs. All right, and that's how people buy these breakouts. I'm scared to trade these stocks a lot of times to go long because they're just so volatile. But if we're looking at it on the yearly, it's showing weakness. And this may be the beginning of the end, and it has a gap to fill below 843. It's gonna get back to that gap, and the reason why I got the alert there, because once it fills the gap, sometimes you get a reversal and then it rips again. But look what happened here, guys, just to show you how support and resistance, you know, how you map support and resistance, how it impacts the stock. So we map some support and resistance here. Let me make sure I have this all here because this is important. And there's some, let me zoom in here to just make sure I got all the lines. Yeah, some consolidation here as well, so that's important. All right, so now what happened the following day? Following day, okay, the stock fades, right? Fades. This is a 5-minute time frame. Now it can't hold. You could short into any one of these, and obviously if I'm doing 5 minutes, especially a stock like this, I'm using a 1-minute time frame for sure. It's just that I think it's hard. It's going to be hard for me to show you everything, but let's see. All right, no, it's good. Works good. All right, so what happens, right? The stock gaps up, right? And look, it gaps up, pulls back, closes, gaps up, pulls back, kind of consolidates at this level, gaps up, pulls back. But look what happens. It's starting to form. Crap. It's forming. Look what happened when it pulled back. This is what I wanted to show you. I'm sorry, guys. I'm just really tired. I gotta go eat dinner. It found its support all the way down here, this consolidation level, and this is where you can buy the dip, where you can see the trend reversal. Now, you can use a trend line going up, but you can also use a trend line going down. So if you see the trend, a stock is on a downward trend, you can then just do this on the opposite direction. Oops, let me zoom out. And you're riding the trend downward, and you can see that it's gapping up, but it's still in this downward trend. Once it breaks the trend, look what happens here. It gaps up, pulls back, kind of holds this level, and then it's off to the races again, you know. And the level 2 in this is so hard to read because it's just all over the place. But what I wanted to talk about more than that is the reversal. So let's say the market opens the next day. It's already closed week, so overextended, right? We look at the yearly, right? It's at the top. It's showing some saying it did it before, it squeezed before, but you got to think at this point, all right, this has gone too long. I mean, it could continue to go high. Anything can happen with penny stocks, but look what happened. The stock spikes. And look what, it can't get to that previous resistance level. It can't get there. And look what happens. It gaps down, gets up, and it can't hold this level now. So that's a level that you can clearly short into. You just got to be able to find the shares and be comfortable shorting, you know? And that's why I like these stocks. I prefer to short off a key resistance level where it's not holding, you know? Where you can see if, and I would have to use, let's do 2 minutes, where it's a lot easier for me to see, hey, look, it's bouncing, but look at this. This is telling me it's not bullish. It's look at the candle. It's telling me it's ready to crack. And look, it literally bounced off this level, bounced up, can't hold this. You can see the body of the candle, can't get above it, and it just fades. And that's where you make all your money. And that's where the short sellers really bank, because these stocks are shitty companies, dog shit, shouldn't be up this high. And you know, if you catch the backside of this, you can make a lot of money. And the volatility is so much that, and the volume's so high, so much volume that it's easy to get executed large shares. So Friday, this was on my watch list because I'm thinking, hey, this is a downward trend. And look what happened. Pre-market, it starts spiking a little bit. Some shorts are covering, right? But we have this consolidation level at 1703, right? Because we had mapped this previously, right? Look at it. And look, this is consolidation here, right? And look what happens. Market opens, can't even hold it. Back up, guess this, can't hold the 1650 level, which is another level of consolidation. All right, this was the high at one point. And look, and this is what short sellers do. They see that it's getting below VWAP. They're saying they can't hold this, and they're risking off this level. And they get down. They go in crazy heavy, 10,000 shares. 20,000 shares, because you can get executed. Look at the volume. It's enough volume where you get executed, and they make a lot of money real fast. And that's how you can make a lot of money doing this, guys. No RSI, no MACD, none of that bullshit. I mean, according to the RSI, this stock was way overextended probably back here, and it went on to go to 20. So don't listen to that bullshit. And that's how you trade off support and resistance, guys. All right. You look for stocks on your watch list that are either holding their highs or stocks that give back a lot, looking for potential short into resistance or to buy a breakout or dip buy because you think it's still on an upward trend. That's it, guys. So again, you know, I hope you find this helpful. I am on YouTube, watchotrade. Okay, I have a whole bunch of videos here. All right, my advice to you is, you know, at the minimum, you know, watch my videos from January 2018 up to now. And if you know nothing about trading, watch this whole series of catalogs of videos, like 14 videos. It teaches you how to this is the foundation of everything. Then I show you how to build my watch list and how to create the scanners, and even how to use virtual trading, the you know, paper trading on Thinkorswim. And you know, you can see a lot of these videos, and they're useful. But you know, I've really consolidated my trading to really base it off support and resistance. All right, folks. So I hope you found this helpful. You know, like, subscribe, share, and let me know what you think. All right, guys, and have a great day.